Well, folks, we got it again. We got Jerome Powell coming out and doing what he does best, changing his mind, flip flopping, trying to feed the market bullshit so it goes up, 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 and not down, down, down. Um, we got the FOMC minutes today. For those who don't know, that's basically their little summary of their open market committee meeting from the 14th to the 15th from last month, and it's an interesting summary. It's basically them just saying that, yep, inflation's still high. We're going to keep up the aggression. But the key thing I noticed was that at the end of the meeting, at the end of the last meeting in June, Powell came out and he said he thought it was unlikely that we would need to keep using 75 basis point moves. But what do we got from this minute? So he literally said this at their meeting, but then he comes out to the public and says another thing. So after the release of higher than expected inflation data, policy sensitive rates pointed instead to a considerable probability of 75 basis point moves at both the June and July meeting. When he said we thought it would probably be rare that they would use 75 basis points. So what does rare mean to you, Jerome? What does that mean to you? Does that mean just whenever you want the market to be happy, you're going to use rare, but then actually you're like, we're probably doing 75 basis points. Rare is turning into the new transitory meme because, I mean, he's come out and said, hey, we don't think we'll need to go above 50 basis points. Oh shit, inflation's so bad. Hey, we're going to do 75 basis points, but we're going to do it rare. It's going to be a rare occurrence that we do 75 basis points. But then before he said that to the TV, to the live studio audience, the clowns and the media, he said to them, "Hey, we think it'll probably be rare that we need 75 basis points." When he knew that that was after he wrote these minutes, and these minutes come out, and then he says, "Hey, it's very probable that we're going to do 75 basis points moves at both June and July." Why do you do this, Powell? So, whether the market is priced that in or not, I'm thinking the market is already priced that in, but it would have been really bullish if he came out today and said, "Hey, we're a little worried about maybe throwing us into a recession, so we're going to be very particular in this next meeting and not just go straight to 75, but hey, maybe think, gee, we might just be throwing the country into a recession." And this is the minutes. You do a control F. They didn't mention the word recession once. They mentioned inflation, the word inflation 90 times in this little 12-page document or 11-page document. So recession is not on their mind, and that's a little worrying. That really worries me a lot, actually, because what we're seeing from the bond market is that the bond market is more so worried about the impending recession more so than it has been about inflation. It's already priced in inflation, but it has not priced in a potential recession that analysts are saying there's like a 70 to 90% chance of now. It's a little worrying that the Fed is not even considering a recession. Right now, they're so worried about inflation that they're not even talking recession. We saw some of this back in 2007 when they were talking about inflation. Back when they were ignoring the impending recession, then they were talking about inflation that was at 5%. That's how much the Fed has changed from today's Fed to that time's the 2007 Fed. They were like scared to death of 5% inflation. They were like, "Oh my God, we gotta get this shit going. We got to ramp up these interest rates. We don't care if the banking system is on the brink of collapse. We need to worry about inflation." But then they had a U-turn, like I've been saying. They U-turned and said, maybe this recession's worse than we think. We're going to focus on that. We're going to cut rates. And they always know that inflation is going to get sorted out in a big recession, especially like the one we had in 2008. So they U-turned, and that's the key. That's what we're looking for, is the U-turn. So we need the Fed to maybe consider, geez, it's probably not the best thing to be super hawkish and lead the country into a recession, because if you look back, every recession has been the opposite. It's usually we start going into the recession when interest rates are high, but now we started going into the recession while interest rates are low. And that's the thing with the recession. By the time the Fed admits that we're in a recession, we've already been in a recession for a year. That's the whole I don't know, fallacy of using the term inflation recession is that it's always like a past tense thing. You're never like, oh, now we're in a recession. It's like, no, no, no. The recession started like months ago. We just didn't admit that we were in one yet. That's always how this shit goes down. So that's a little, it's worrying. I'm not sure, and you could see the the complete confusion from the market. It just like had no idea what to make of any of this. Let me open this bad boy up. Gotta get my big guns out for this one. So the market really didn't know what to do today. It dumped on this news and it ripped and then it dumped into the close. And I mean it's worrying and confusing why Jerome Powell is so willing to uh, be very I mean I don't know, just be very bizarre about his wording with everything. Why he comes out and says rare, but then he like I don't know. He's the one who writes these minutes. Like he comes out and tells the media, "Yeah, we think 75 basis points will be rare. We did it this one time because we were shocked by how bad the inflation was." But now they're like, "Yeah, probably going to be 75." And I just don't think the market's going to like that very much. It's pretty shocking to be honest. I was kind of in the back of my head praying we'd get the Fed coming out and being like, "Yeah, we decided, hey, inflation's bad, but we got to see." And that's the other thing. They don't know how these interest rates are going to affect the market. I've been talking about this for months now. You don't see anyone else talking about this. That's why you guys come to me. I give you the download. No one else talks about the fact that the interest rates don't have an effect on the actual economy until 6 to 18 months after they've been instituted. So we are still ways away from seeing how this will actually affect the economy, and that's the policy side of this. Is that their policy needs to be I mean it's like they're trying to shove their I don't want to be vile, but it's like trying to shove a dick into your Cheerio without breaking the Cheerio. Like they have to like finesse their way into this so perfectly to not cause a complete collapse, and it's so hard to do that when you have to be so aggressive because you're so far behind the inflation. But if you're too aggressive, you don't know how bad your interest rate hikes are going to affect the economy. And that just creates this whole other issue. And then not to mention all the issues with gas and supply chain and yada yada yada, commodities off the chart. So that was kind of interesting that we got this market response the day after we saw oil prices completely tank. I mean, oil it's broken its uptrend. I mean, we had a nice, this is its nice little uptrend right here. It's broken clean out of that and it's dumping. So that is a recessionary price movement when you see oil dumping, because oil always dumps in a recession. So that was very interesting to see today. But otherwise, what the market did was just interesting. I mean, it didn't really know what to make of this, and I think that might be the. I hope not. I think that might just be the case for the market until we get the next CPI report, which I believe is next Thursday, right? Yeah, no, the 11th, Tuesday. Um, so we could just chop around until that, and then that's how the market works. We get the next terrible headline, terrible inflation. Oh God, Fed has to do 75 basis points, and then we dump. The market just has been changing its mind. Sometimes the markets, it doesn't want the 75 basis points, but then when it gets it, it's happy. But then, oh wait, 75 basis points, it's just like, it's so emotional. You don't know what the market's going to do. The bond market is much more stable, but the bond market is showing that it's more worried about a recession now than it is inflation. And that's kind of where the market's looking at right now. I mean, the market started dumping 6 months ago. The market's usually looking forward about 6 months, and we started dumping because the market saw how bad inflation was going to get. So it priced that in. We priced in inflation. We're down 20% on the S&P, all that shit. Everything's down hard. We've priced all that in. Now we have to be like, oh no, maybe we're tightening into a recession, and that is not good news. So it's just upsetting to me. It's a bummer that Powell is so wishy-washy. Because I mean he just has to be, because he knows there's so many moving pieces. He can't just come out and concrete be like 50 basis points, I don't care, and then we get an inflation report that's like 12%, and then he's still like, nope, I said 50. But it is kind of worrying that they just aren't even talking about a potential recession. I mean, this is the Federal fucking Bank of America, of the reserve currency, and they're not, the word recession's not even mentioned in here. They're not even going to talk about that. Inflation is what they're worried about, but they also talk about labor. They mentioned labor. They talk about the labor market. It's very tight. I mean, this is the unfortunate part about capitalism. Not to get all political, but they mention how the supply and demand for labor is so high right now, which is usually good for the worker because when you can up and leave your job and get a better pay elsewhere, that's good for you. That's good for your wages, but that's bad for inflation. This is why us middle classers can't be too rich because oh no, inflation goes crazy. So they're basically admitting that they're going to have to slow down the labor market, which means less open jobs, which means less leverage for workers, which means less money for workers. They basically admit that they're going to have to start not killing the labor market, but some people flat out come out and say it on CNBC. They just flat out admit that, yeah, we need to see like a 5% unemployment for inflation to go down. We need people to get more poor for inflation to go down. It's like, is this a? It's so very depressing. But they basically say in the nicest way possible that we need to see the labor market slow down, which it's the nicest way of saying we need people to start losing jobs. We need jobs to go away. There can't be this many open jobs because it's not good for inflation. Um, and their only means of doing that is just by jacking up those interest rates. But we just don't know how extreme these rates are going to, or how drastic of a impact it's going to have on the economy yet. It's just too soon to tell. I mean, we got the first 25 basis point hike 6 months ago. 2 months ago? No, not 2 months. 5 months ago. So we're still like the economy's not even feeling that yet. But yeah, it's just the waiting game, you know. If we rush our way right into a recession, I think Powell will come out and give us a pause. That's the word you want to see is perhaps a pause. They will wait and see. They didn't mention a pause, which that would be the best news imaginable for the stock market. If they came out and said after like August or after the September meeting, if that was like their last rate hike for the year, and they're like, we're gonna take a pause and see what happens from there. That I think the market would fucking go crazy off of that for a little while, because that would actually be them slowing down a little bit and not just going hardcore pounding interest rates down our throat. Um, so we just it's the waiting game now. This is the market we're in. I mean, it's just the market of patience. It's impatience was rewarded these past couple years, but this is the market of patience. You got to be patient. If you're shorting shit, you got to be patient. If you're trying to scalp longs like I am, like I'm trying to get some. Which look at AMD. AMD's up like shit. AMD up 0.5% after hours. I think AMD is gonna do something big. I gotta go on my AMD rant, dude. AMD is driving me fucking crazy, dude. Like, what is going on with AMD? We have AMD went up like hardly sideways today. It barely closed above $75. Meanwhile, we got Nvidia. Nvidia's got no problem going up. It was up like 2.5% at one point. Micron is up about 1%. Qualcomm up about 1%. But AMD's over here barely squeezing out a sideways day. Like, what is going on with AMD? So I said that when I got these AMD calls. I told y'all. I said this is AMD. They play games. It doesn't just go straight up. This is AMD. It plays games. One thing I did mention, I did notice that this was the first consecutive green days, back-to-back green days since way over here in May. So that's a pretty good sign. When we saw these consecutive green days, I mean, last time we were at support, which this is a perfect example. Look at the last time we were at the support line. We got barely a green day, and then a nice green day, and then an ugly ass red day, and then finally AMD went straight up. That was of course off of its earnings, but still, it's just AMD always plays these games. That's just the way the stock goes. But I'm still confident in the play. I'm still hodling for some bigger gains on that. I'm up like $8 on it, dude. But I know this thing's gonna bounce. I got the time. I bought the time on the contracts. That's why you buy these later out calls. I know if I bought weekly calls that expired this week in the money, I'd be up like $500 right now. But I want a bigger gain than that, and that shit's too risky. I can't do it. But I think AMD is about to do something stupid. I think we get a crazy day out of AMD. But I told y'all, man, this is why you guys gotta watch me. You gotta like, you gotta subscribe, you gotta hit the bell for notifications. Comment down below if you entered this play with me. I told y'all we were getting this bounce right here. I called this perfectly, dude. I told y'all. I come in here for free and I tell y'all what's gonna happen. And you guys gotta just get in on these. I'm not a financial advisor though. Do not take my advice. This is entertainment purposes. But anyways, looking to see what AMD does. Next key level that we got to break out of on AMD. Man, I'm thinking 76, 60. We got to take that out on AMD. Then after that, of course, 79 before we have gap to fill above that, up through 80 up until about 80, 70. And that's kind of my price target on AMD for this play I'm in. Otherwise, we could come up way up here, and I mean, shit, we could tap this resistance line all the way up at 87 bucks, but that'd be pretty crazy. But hey, AMD's done it before. AMD can do some crazy shit, man. If it gets some good headlines, if we see some bulls show up in the semiconductor space, AMD can gain some momentum big time. But it underperformed the entire SMH, the entire index, the entire semiconductor index. It underperformed, and that sucks out loud. I don't know what AMD's doing out here, my guys. But shit, AMD's up 0.5% now. I wonder what's causing that. Anyways, guys, just more shocking news from the Fed. The market didn't go crazy, so I think tomorrow's going to be very interesting. We could flat out dump tomorrow. We could just go straight up. I think the market was holding its breath to see what came from these minutes that we got today, and now it might have permission to lift off. We've had some very bullish price action these past couple days, so let's see some green, baby. How about it? You got to make the money. You got to make the money on these pumps while you can, because they're gone in a freaking heartbeat as soon as they started. Once we get the next bad news, and that's the way this market goes. So thanks for stopping by, folks. I'll see you later.